Hi everybody and welcome to Week Ahead Snapshots. My name is Andreas Haralambus. I'm a senior market research analyst at Bullwaves, and this is a small section outlining the key events that are upcoming this week that you should probably familiarize yourself before you start your trading week. So without further ado, let's get started. So on the first slide of our presentation, we gave a little bit of a context before we start outlining those key events. So last Friday we had cooler than expected non-farm payrolls jobs data coming in. So this kind of skewed the odds for a rate hike at the September meeting in regards to the Federal Reserve. So this story is going to get challenged as we get a crucial CPI print coming up later this week. And that is not all. We also have a central banking decision announcing their let's just say policy rate, the updated policy rate. We have earnings stories coming through once again related to the AI story. We also have a growth story coming up from the United Kingdom. And last but not least, obviously, geopolitics and more specifically Brent and its trajectory and its expected trajectory throughout this week. So let's dive in a little bit more deeper, starting off with the Reserve Bank of Australia. So RBA is announcing its policy rate decision in tomorrow's early Asian session. Markets are expecting the bank to stand on pause and keep rates steady at the 4.35% level. We may say this is a kind of a baked-in decision. No deviations are expected to occur. What we are primarily interested in, and the reason why we actually put this information out there, is to note the fact that RBA policymakers have explicitly stated that they're not ruling out the option to do more, meaning hiking rates, primarily because they continue to see energy prices at least moving on the north side of the equation. So a rise of oil and many other forms of services inflation in the Australian economy has created this kind of problem to be watched by Fed policymakers. And more specifically, we saw inflation being around 3.9% level in the most recent reading. So that is above the bank's 2 to 3% target mandate. So maybe this kind of hawkish tilt is going to continue coming forward from the Australian economy, which is obviously heavily relied upon exports, and this kind of imported inflation risk is going to make their life a little bit more difficult, if you like. So Aussie is primarily expected to gain against the Japanese yen. So that is something we do explicitly highlight for the immediate future, mainly because the Japanese yen continues to be weak despite intervention. So something to keep a close eye out. So on the next topic, we have primarily the most important event of the week, which is the US CPI print, US CPI data, inflation data coming from the United States. This is on Wednesday. So expectations from polled economists are pointing that inflation rate in the United States, headline inflation at least, is expected to ease by 0.1% to the 3.4% level, down from the 3.5%. And now we're talking about the month of July, which we saw, if you remember, this kind of spike in energy prices, a fall in energy prices, and a rebound. So the roller coaster situation in regards to energy prices in the month of July definitely skewed the data for some reason. Polled economists do expect that this is not going to showcase in the print, so they expect an ease of inflationary pressures by 0.1%. We'll see whether that is the case. If we get a much hotter than expected inflationary print, primarily due to the fact that we saw these kind of whipsaws in energy prices in the month of July, maybe this is going to put additional fuel into the hike debate situation for the September meeting. Maybe the odds are going to start rising again if we get a surprise beat north of the 3.6% level, and this is going to push policymakers to rethink their prolonged pause and possibly start moving even closer or faster towards a hike, which is what the majority of market participants have expected over the past few months now. So this is going to be definitely interesting. This is the key event of the week, and it has a lot of echoing kind of reactions in the making in regards to not only stock markets, bonds, and FX markets as well on the back of this kind of data. So crucial data on Wednesday, the key event. Moving on, we have AI earnings, more specifically CoreWeave and Applied Materials. Yes, these are not the largest of names, but they do have potential to distort the AI race kind of build out narrative if and only if they continue to beat expectations and continue to surprise with the EPS and revenue target beats. So we'll see about this. So CoreWeave is gauge, if you would like, into the AI capex demand side of the equation, whereas Applied Materials are the ones that are making stuff. So they're making the hardware that these kind of frontier labs are using. So we have an AI gauge for demand and an AI gauge for supply in regards to this kind of earnings results. We'll see how they fare across this, and whether this kind of prolonged capital expenditure journey is finally going to start bringing in cash and money for investors, or is it just going to stay on the expenditure side of things? So this is going to be extremely important, at least from our point of view, for the at least an update for the trajectory of the AI gameplay. So yeah, CoreWeave and Applied Materials, one is coming up on Tuesday and the other one is on Thursday. Definitely going to keep an eye on this. Moving on to the next topic of our discussion is the UK's growth trajectory. Obviously not good yet again. So 0.2% is expected to be the growth of the UK economy for the second quarter of 2026, down from what 0.6%. So at the point where UK participants expected their economy to start gearing up from there, we now have an expectation for a slowdown. It's not a contraction, but at least it's a severe slowdown, a loss of momentum, and the fact that market or polled economists are highlighting this kind of scenarios because we see continued cost pressures coming through, weak demand, but also these kind of prolonged conflict in the Middle East is destabilizing the situation and creates uncertainty for the conditions, for the growth conditions of the UK. That's why the GDP is expected to fall to 0.2%. If that is the case, we'll see with the update coming up on Thursday. And next topic of the conversation is obviously, last but not least, our geopolitical radar, which is going to keep a close eye on Brent futures yet again in WTI futures. Also, Hormuz tensions are back in the game, then actually never left. So besides Strait of Hormuz tensions and retaliatory strikes between the United States, Iran, and nearby Gulf nations, and we now have the Yemeni Houthis striking a Saudi refinery, which is once again adding a new complexity into the whole energy crisis situation in the Middle East. So the Strait of Bab el-Mandeb is going to be added into our watch lists, and we will keep a close eye on the developments there as well. Another crucial choke point in regards to tracking or the passage of shipments of energy shipments, more specifically, and shipments in general. And this is going to be, again, another crucial area of development that we will be focusing all our attention on in regards to gauging how energy prices are gonna evolve from here onwards. Okay, so at the end of the day, let's not forget that the whole energy crisis across Middle East is feeding straight into the debate for the not only the Federal Reserve but also the Reserve Bank of Australia, Bank of England, and all the other major central banks around the globe. So that is why that's another peak, or at least another point of view of how and why these kind of events are important to us, not merely in regards to the price of oil in general. So this final slide is a visual representation of when each and every one of those topics discussed here is going to come through. Tomorrow, RBA and CoreWeave. On Wednesday, we have CPI Print. On Thursday, we have the UK's GDP, applied materials earnings, but also PPI from the United States. Lastly, Friday, we have a caveat for the US consumer, where we're going to get retail sales. Yes, an important gauge of the US economy. So this is it for today's week ahead snapshot section, guys. Thanks for watching. Hopefully, we're going to catch you up next week for another one. For the time being, take care. Bye-bye.